let's just get to it. All right, folks, let's get right to it here. Stock market flat generally today, folks. Generally flat. Now, for you folks that were out here waiting for a stock to watch from yours truly, I did announce one earlier today, and the stock in question was a Avenger Inc., and it was up 30% in the pre-market, folks. Now, the reason I said this one was a decent one to watch because of a variety of different factors, and I want to try to talk about these so that people ask themselves, how did Ghost exactly pick that one? How does he do it? Because most people have alluded to the fact that pattern or day trading is that of like, a casino or, it's a lottery system. That is not the case. That is absolutely not the case, folks, okay? Now, let me explain what's going on here. Now, first and foremost, when I saw that this was up 30% in the pre-market, it had already been traded, I think, over 600 or 700,000 shares in the pre-market. And at the time, it was up 30%. Now, you take a look at that particular price, it was about, I think it was about $290. I think it made about $280 something in the pre-market. You take a look at the 52-week low, okay? 52-week low on the day was $2, all right? 52-week high on this stock, $17.89. And for you folks that want to know what the symbol is, it's AVGR. AVGR. Now, when I take a look at the 52-week low, it's obvious that we're coming off those 52-week lows, so that's a decent sign. Even if you are at the tail end of a bad run of the stock, if you're coming off the 52-week lows, that's not too bad. I mean, I wouldn't go just on that factor, but that's a factor to consider. Then you take a look at how many shares had been traded in the pre-market. As I stated, there was about 600,000, 700,000 shares traded in the pre-market of this stock. You take a look at the average volume of this stock, the average daily volume, which is the average shares traded per day of this stock, is 299,369 shares a day. Now, folks, for you folks that are unaware, I had been talking about that's the way you gauge whether or not you're going to make a play on a pattern or day trading position on a given stock by taking a look at the pre-market, taking a look at these big percentage jumps, comparing what and how much shares are being traded in the pre-market, compare it to the daily volume average, and at the time, the volume in the pre-market was like 700,000, and the average volume is 299,000, so that tells me a lot. It tells me that all of a sudden we got a lot of people beyond the average daily volume holding the bag beyond the 52-week lows that we're coming off of. Like I said, we just talked about the 52-week low on this stock being $2. So that's a good sign. Secondly, you take a look at the 52-week low and the 52-week high, that's a big range there. 52-week low on AVGR was $2. 52-week high was $17.89. That's a big gap. Now, what we're seeing here is we're seeing that there's people holding the bag at this gap. There's a lot of people holding the bag, so some of them are going to want to jump ship. Most of them don't. Most of them, I mean, just imagine the schmucks that are holding the bag at $17.89. There's a lot of people holding the bag at those prices. So you combine that with the price in the pre-market, with the volume in the pre-market, combined with the daily average volume of that stock. These are factors that are going to give you a gauge on whether or not to invest in this stock in a day trading, pattern trading position. Now, last but not least is the news. The news is really going to gauge whether or not the stock in question is really going to get a lot of hype. And the news on this particular stock was Avenger announces 24-month outcomes from a pivotal vision study of luminascular technology for peripheral artery disease. Basically, it was a nice, positive study, And that's what really fuels the market in these pharma stocks, biotech stocks, that sort of thing. Now, if you take a look at the chart on AVGR today, you get to see the volatility in the beginning of the first hour, maybe the first hour and a half of the market. You take a look at those big peaks, those big waves, those big dips, and then right around 11 a.m., you started seeing these really choppy waves. You see these little choppy-ass waves, real short, real choppy, even though you did see a peak here at around a little after lunchtime, maybe about 12:30, but there were a lot of little choppy waves. This choppiness signifies that the day traders, the Wall Street guys, the mutual fund managers, the machines, all found this stock, and they're all trading it. As a matter of fact, I stopped trading this stock at around 11, and right when I started seeing the choppy waves, and at that point, it had already been traded 5 million shares, okay? 5 million shares. So that should tell you that it's gone beyond the average volume, and it's gone into the realm of the volume potentially being a detriment to the stock, because you can actually have too much volume in a stock. When you start seeing 5 million plus shares traded within the first several hours of trading a given stock, no matter what stock it is, even if the stock is used to that type of volume, all you're going to see is choppy waves like that. Right after you see what I'm saying? Look, check out the day's chart on AVGR, and after about 11 o'clock, all you see is these real short, choppy-ass waves. And, you know, as a day trader, as a pattern trader, you get a little antsy, you know, and you don't get patience in the game of day trading. So what happens is if you're holding at one of these positions in these short, choppy waves, you're going to see the goddamn price go up and down. You're going to get antsy. You're not going to be or have the patience to wait until 12:30, 1 o'clock p.m. when we started seeing the peaks in this on this particular stock. And the only reason it went up is because a lot of those day traders and a lot of the fund managers and the machines started abandoning ship of this particular stock because, I mean, at some point, it's just too choppy. It's like, okay, great, maybe I'll make a penny, maybe I'll make 2 pennies. It doesn't even compute. But either way, folks, this was a decent play to make in a variety of different ways. You could technically have waited for the first dip in the morning, which would have been at around 10:30 p.m. As you can see, that's the low point. I think it went down as low as about, what was it, 290? 290. You could have purchased it at 290, 295 and held it today and cashed out at today's close at 310. And to be completely honest with you, you could have made a 1 day's play just on holding it. Because I know there's a lot of folks out there that just don't have the time to day trade. They've got daytime jobs. They've got things to do. So as a result, what we're seeing here is we're seeing potentials for plays for those types of people. That's what I'm trying to get people to gauge. Another strategy is if you have a broker who actually trades in the pre-market, that's why people buy in the pre-market. People buy in the pre-market anticipating these types of big peaks. And, it's hit or miss buying in the pre-market. You could buy yourself 100, 200 shares, go to work, and at the end of the day, you could watch your damn money double, maybe triple, or you could see a loss. It all depends. So, these are strategies. Another strategy is looking into the schedules of earnings, of when certain companies are going to announce their earnings. And if you base a pretty good judgment call on the corporations that you research in these earnings calls, and you speculate based on research, and there's you got the internet at your fingertips. You should be able to research anything about any company, all right? As a matter of fact, you could also call investor relations in a lot of these companies and ask them questions. And if you think that they are going to release a positive, or if you could speculate they're going to release a positive earnings report, You can make a play a week or several days before, hold until the earnings, and when they release a positive earnings, you're making big-time capital. I mean, and listen, this can also go behind the whole day trader $25,000 rule. Now, I have been forwarded a certain other brokerage account for you folks that don't have $25,000 to put legally, thanks to Mr. Yes We Can, that's the new legal limit to day trade. I found a offshore trader brokerage house that I'm still doing a little bit of research on that's out of the Bahamas that basically bypasses the whole rule of the $20,000 a day trade type of thing. They do make money on certain fees, certain margins, so I'm just going to do a little bit more research on this company before I actually suggest it, because the reason I'm going to suggest it is because I want regular, everyday people to day trade. I want individuals who have a day off to be able to, and look, the minimum to put in on this offshore account is $500. $500, and you can start day trading. I just want to make sure that the platform is okay, that there, isn't any kind of discrepancies with depositing or getting funds, that sort of thing. But if this is legit, I would definitely like to encourage everybody that's listening to do this. Now, with that being said, that is the analysis of AVGR. That's why I thought this was a very good play today, and it was, as you can see, until maybe about after 11:30. But if you were patient enough and held on to it till about 12:30, 1 o'clock, you could have profited.
Das Wow der Woche von O2. Samsung Galaxy S7. Wow. Unendlich surfen mit O2 Free. Wow. Zusammen ab 34,99 im Monat. Wow. Nur für kurze Zeit bei O2. Mehr Wow geht nicht.
Anyway, nice stock. That's how I was able to choose it. That's the strategy that I use when gauging what I'm going to go into as it pertains to a play on a pattern or day trading position. And you can go in and out depending on these waves and dips. You could go in and out on these sons of bitches. That's what makes it so beautiful, man. I mean, liquidity everywhere. And when I don't suggest a stock, the reason I don't suggest one is because there is so much low volume in the market in general that the market lack of volume could potentially ruin a position that you could be holding on in a day trading or pattern trading position and literally cause a flash dip that you didn't anticipate because there's nobody buying in the market. It's not a buyer's market. And you want to day trade in a buyer's market. So whenever I don't suggest a stock, it's because the volume is a little bit too uncomfortable for me to partake in pattern or day trading, and it's better to, keep your money than to, try to force profit that isn't there,